All right, everybody can hear me okay? Cool. Any problems with audio? If you guys got questions at any time, just let me know. I'll try to get to everybody's question. You can leave them in the chat, raise your hand. I'll try to get to everybody. So for tonight, what I wanted to do was, I think you guys can. Oh, I think when I switch screens, it doesn't work. I don't know how to do it the other way. Let me try to do this a different way. Give me 1 second. All right, here we go. How about this one? All right, so tonight just talking about trading the different time frames. I see a lot of mistakes happening in the Wealth Squad with a lot of people getting stopped out of trades too quickly, staying in trades too long. And I think a lot of it deals with not really understanding the time frames necessarily, or just looking too far ahead, or just being on the wrong time frame, I think, and just kind of analyzing data. If you're looking at the right time frame, you can stop your losses a lot earlier than what you think. So I think a big part of that really entails with just being able to understand the data that you're looking at and how you're looking at it and how you're comparing all of them together, right? So I just want to hop over to the charts. I appreciate everybody who reached out ahead of time with some tickers. I got a list of some I'm going to try to get through for you. And I see yours, Venetia, for Meta. Amar, somebody already told me about Apple too, so I'll try to take a look at that. One of the ones I actually really want to put you guys on to beforehand is I was going to post about this today earlier, but I've been trying to do a little bit more research into it because I'm not really sure what the deal is. You guys know that I follow all the inside trades and I use FinViz to do that. This is just where that's at, FinViz, the insider tab, buy transactions, and this is where I track the majority of it, and then I cross-reference it with the SEC. And actually, like, I go and I read the form and I look at the annotations and see, okay, well, is this a realistic buy? Is this an exercise of options? Is it warrants? Like, what is it? That's why I go to this, so I can cross-reference that and I can go to the source and actually read that form. So I do that on all of them that I research that are big purchases. But I mainly look at the ones that are like $1 million or more. Anytime that the CEOs and everybody are buying $1 million or more of those, like, it's important. I always go in and I try to research them and try to find clues and figure it out. So in this scenario, DSGN, I noticed that there were a lot of big buys today, like basically about 15 million in buys for DSGN. Somebody asked me to look at this too. I'm going to take a look at it because I didn't mean to click on it that early. I'm going to go back to this chart real quick. I say I want to research this one because when you look at this chart straight away for DSGN, you see where it's at $8, and then you see that massive gap in between, just right above $10 at the base there back in May, and then it's right around $13 in December. So that's a pretty huge gap. And you guys, I did that training on trading the gaps, and this is actually a pretty big move. So that's one that I'm gonna dive in and research more, like, tonight, and look and see, like, what's the status of all of that and what they have coming up, and what are some clues of why the director is buying that many shares. The other one also that I noticed was NXPL. NXPL is a $2 billion purchase, right? So there's a $2 billion purchase, and what this was, I believe, was their public offering. They completed this, right? It just went into effect, I think. But this buy was made on the 14th of December, but it was just reported today. So this just tells you, like, when big things happen in the market, somebody knows, and it gets suppressed for whatever reason, and then it comes out after the fact. So I went and I looked at I did a little bit more research on it. So it looks like the public offering is somewhere around $1.75 a share, something like that, if I remember correctly from it. And it's right where it's at right now. But again, like from where this was before to where it's at now, it's like it's twice the money. And they have $2 billion invested. And then you see up here a little bit further. So those were reported at 1247 today. But then you see that at 247, the director, who wasn't even on the list before, right? He buys 29 million shares, $29 million worth of shares at 3,000, which is at it, but it shows that it's at a higher cost. So this is, my thought of all of this is that these are warrants, warrants, and it's that whole exercising of that at a lower cost per share. So there's research with that, but this is one that I'm actually looking into, that I want to get some more background on, because if they're exercising that much in warrants, or they're activating that, they're underwriting that trade, then somebody probably knows something. So honestly, I would keep DSGN and I would keep NXPL on your radars. And like I said before with that, is that usually after massive purchases happen, it's usually a period of like 3 to 9 days when the stock starts to do something. Not always the case, but there's that little period in between where it really starts to move within that time frame. Just in trends that I've noticed in researching some of these purchases, and also the money that I've followed with these purchases. So I just wanted to point that out really quick to you guys before we get into some of this other stuff. Look at Amazon, EXPN, and ENPO. Let me just write these down. I don't think I'll be able to get through all of these because I have a long list, but I'll do my best. So let me hop over here to TradingView. I'm going to cover SPY just to start out, because SPY is what we all pay attention to and what we look at. So this isn't really like a set in stone rule. One of the things that I want you guys to think about when you're on your time frames is that if you look at the stock market as a whole, historically, so much of the market is really all about math. And the beautiful thing is we're in this age of technology where a lot of that hard math is done for us already through these indicators on our charts, through the scripts that are written on TradingView, whatever. It's compiled all of this math together for us to where we don't have to manually sit there and do it like a bunch of nerds. Some other nerds have already done it for us. And so you being able to leverage that math and that data is what helps you understand these charts. So if you look at the market as a whole, in general, when you look at the returns of the market, it's really all based on standard deviations, right? And this is a whole nother lesson in its entirety on standard deviations, which maybe I'll do on a later training. But if you know anything about standard deviation, so basically what that is like, it's a measurement of the probability of something to be profitable, something to work out, right? You have a certain set of combinations, right? We have all these math problems all the time, and there's all these, what are the different combinations that this could actually end up being? So it takes all of that into account with standard deviations. And if you're looking at the standard deviations, which is also a trading strategy, there's people that trade purely on the standard deviation who are very successful with it. So essentially, going through this data, when you're looking at the time frames, there's a general rule of like 3 to 5 or like 4 to 6. So if you're looking at, say, a 5-minute chart, right? So that's your baseline time frame of what you would be trading. But then your higher time frame, some people would trade a 5-minute chart and they'll be like, oh, well, the weekly's saying this. It doesn't matter what the weekly says if you're trading on a 5-minute chart, because it's so far away from anything that you're actually looking at, it has zero relevance in terms of the data that you're looking at. So if you're comparing anything to a weekly chart with a 5-minute chart that you're trading, you're already missing the mark, and you're already going to confuse yourself. You're already adding so much noise into your charts already. So you want to keep that, you want to keep it tight, right? So if you're trading on, say, a 5-minute chart, then you're basically timesing that by 3 to 6, right? So if you're on a 5-minute chart, let's just say you would be essentially trading your higher time frame that you're going to be looking at is a 30-minute chart, right? 5 times 5 is 25. Or you could do it less than that, however you want to do it. It's not a rule that's set in stone. It's just a guide that I know a lot of traders use, that I use myself also, and it keeps the data that you're looking at clean within the time frames. And when you compare those so close to each other, there's more certainty and more relevance, right? So for me, my main time frame that I always look at is the day charts, right? So if I'm looking at the day chart, I don't necessarily enter all of my trades on the day chart, right? To enter your trades, you go to a lower time frame. So if I'm on a day chart, there's 24 hours in the day, right? So if you divide that by 5 or 4, you're basically, your lower time frame of entry would actually be like the 4-hour chart, which I know the strat uses a lot, right? I know Ray, and when Kayla was in the Wealth Squad too, a lot of the entries were planned out on the 4-hour chart. That's because it's the predecessor to the day chart. And if you're looking for, sort of like, you've got your baseline, you've got your higher time frame, and then you've got like the minor time frame, essentially, right? So from the 4-hour chart, you would basically look at the 1 hour, something that's closer connected. You wouldn't look at a 30-minute chart, right? Because it's too far away. It's kind of right on that cusp. I suppose you could look at it, but I think if you're going to go from a day chart, the 4-hour, the 1 hour would be your trifecta, if you will, to where you want to measure your entries and your exits, and see what that language is talking about on each of those. Does that make sense to everybody? Y'all follow me with that? Does anybody have any questions on that? Because I think it's important. Nobody? Cool. Moving on. So with SPY in general, right? Let me just, I'm just going to remove all of these drawings just so I can do this in real time. So let's just say, for instance, right, I think right off of the bat, it helps to know what the price action data is doing, which I have on the charts already. So that ATR being almost $7.50 for SPY. So right away, basically what that's telling you is that price action data on the day chart, the maximum possible of what this could do before it hits resistance, before it hits support. So you're essentially looking at 387, 388 of where this could go. And then if you go and match that up specifically on the chart through support and resistance of where this is at, you can see that it's right at those precise support and resistance levels, right? You can see that it's almost right here where all of these touch, right? So and this isn't completely accurate, so bear with me with that, but let's just mark this here, like just say the 388, basing that off of the ATR, the average over the 14-day period of price action movement, right? It compiles that, puts it into an average, and then that's what you can use as a guide for basically your price channels on the day, right? So you do this to the downside, and you're basically looking at like 373, 374, which is, you look at the chart and it's almost exactly where the sentiment shifts, right in here, roughly, right? Give or take. We'll put it here just for this sake, right? So if you go and you look at, I'm going to hop over here to just over to stock charts really quickly. So if you look at, close this down. If you look at what SPY is doing, obviously the market's just kind of in a weird way right now, right? So you end up mapping out these high points to these low points and these trend lines, and you can already see that SPY is already sort of consolidating within that channel, right? If you take that trend line, and why did I just have a brain fart on trading view? I totally just had a brain fart. I was like, well, how do I, oh, here we go. That's why, right? So if you draw this, you can essentially draw this trend line all the way across here and see these hit points, right? You've got a hit point here, you got a hit point here, you got a hit point here, which is essentially that confirmation of the downtrend, right? And then you can take it from the lowest point of where this is at here, and you're going to end up drawing this up. But even more than that is that it's almost like a wedge based on where these are. So these lines are pretty much already drawn for you if you're doing that. So if you're looking at SPY on the day chart, and then we're going to backtrack. We're going to backtrack here to the 4-hour chart, and then I'll work it through from the 5-minute to say the 30-minute chart too. So if you're looking at where SPY is going to go, this is essential for tomorrow. Like, this is your channel. This is your range of data that SPY could potentially go to 373. SPY could potentially go up to 388 on the day chart, right? For the whole entire day. Now, that doesn't mean that you can't be successful if you scalp this throughout the whole entire day, if you scalp those fluctuations, but you know the range of data of where that sits, and what that could do. Now, is it possible that it could break outside of those? Yes, it's definitely possible. So as it gets closer to that, like say it's at 386, then I might go and chart that next level. Or when it gets to like 384, I might go chart that next level up or that next level down based on wherever, the strength and the momentum of wherever it's going, right? So that you can end up mapping out what those levels are and what that language is and what that's saying on the day chart. And then coming down to knowing this data here, let's drop down to the 4-hour chart using that same 3 to 5, 4 to 6 ratio, right? So we're on the 4-hour chart. Now the downtrend is pretty much the same. Like it's pretty recognizable on the 4-hour chart because everything is so condensed. It's a lot easier to see when you condense things rather than when you spread it out even further. It's a lot easier to see when you compact it. You can see the levels much easier. So when you're looking at the 4-hour chart and looking at what's the next range of data that this needs to get before this breaks out and it gives me a confirmation of my trade entry. Well, if I'm looking at this and I'm looking at previous highs and previous lows of previous days, ideally, like this earlier entry is here at 383.68. But then you could also take it a step further if you really wanted to be sure of what that is. It would end up being the 385. That would be the confirmation that this is going to end up starting to run bullish, right? But then, it's going to hit that the day chart resistance at 388. But if you map out these levels ahead of time, right, from where this is, I want to back up actually. So this is the end of the day, but let's take it back to yesterday, right? Let's look at yesterday's data, which is right in here. 22nd, yeah, so 9:30. So this was yesterday where this closed, right? It closed right above where SPY's ATR basically was. It wasn't much lower than that, or much higher than that. It was at 375, right? So if you're at 375 in this scenario, and you want to map out these support and resistance levels based on this previous day, it essentially gives you all of the information that you need for the following day in terms of how to execute your trades, right? So if this was at the 375 and this needs to break the previous highs of where this was, essentially where this needs to break is ideally right in here where this sentiment shifts, and you see these candles, how it kind of goes sideways here for a minute. Yes, you have this big candle right here, but I'm also looking at where these peaks are too, right? Where this peak is, this was the resistance here of where this got pushed down, right? So you can map this out ahead of time at 377.95, right? Is where that's at. Now in between, there's little sub levels. Now, if you're, and this is over the course of 4 hours. It gives you those confirmations that are going to inform the higher time frames, right? So let's take this down to the 5-minute chart. I'm going to delete the 377.95 that I just made. But if you look at that 377.95 on the 4-hour chart, you see where the 5-minute data just hovers on that sentiment, right? So for me, when I'm going through these charts and I'm mapping out these levels on the higher time frames to figure out what are my lower time frame entries, it helps to know what your strategy is, first of all, right? If you're trying to scalp things, you trading on the day chart or the 4-hour chart isn't necessarily the best move. If you're trying to scalp trades, then you would probably ideally be on the lower time frames, the 5-minute, the 15, the 30, or the 1 hour, right? Those would be the time frames that you would be scalping at. You're not necessarily going to scalp the trades quickly on a 4-hour chart or a day chart. Occasionally you might. It just all depends. But the further out you go in your time frame, the less noise that you have to deal with. And what I mean by that is when you're looking at the higher time frames, news in the market doesn't necessarily matter in the same way that it matters to the volatility on a 5-minute chart or a 1-minute chart, right? If all of a sudden a stock gets acquired, you go on a 5-minute chart, it's going to skyrocket. But if you go look on the day chart, it's barely even moved, right? So there's a level of noise that you have to be able to discern from when you're looking at the charts. You can purely trade without any of the news, without anything on day charts, just strictly going on support, resistance, mapping out the levels, the ATR, using some of those indicators. Whereas when you're on the lower time frames, that's why all of these meetings are important. The CPI numbers, all these things. And this is why people scalp on the smaller time frames, because it's so volatile when those things hit in the way that they aren't on the larger time frames. So that's the difference within that data. Does that all make sense? Yeah, Kay Adam says, I definitely been pairing the wrong time frames. So always think of it, that 3-to-5 ratio or 4-to-6 ratio, right? And you can test it. It's all about finding the tools that work for you, the tools that make sense to you. But ideally, like anything, you want to keep your data close together so there's correlation to it, right? Because how I always say this in my research, you always want to connect the dots to certain things, right? So if you're trading on timeframes that are so far apart from each other, you're just adding in a bunch more nonsense that you don't even have to, that's just going to complicate your trading strategy, and you're going to lose on your trades. You're going to get stopped out early. You're going to get smacked in the mouth on your trades if you're not if you're not connecting your data the right way. LD Vega says, I struggle with what time frames to look at on the Wealth Squad trades to follow the logic. It all depends really. Between myself, Ray, Kia, Chris, Crystal, we all have different trading strategies, but I know a lot of us look at the day charts, right? If you get that big picture of the day chart of what that says, what that language is, and what it's doing, it makes it easier for you to interpret the lower time frames when you understand the bigger picture a little bit better, right? It's hard to really understand the compact data if you don't understand the macro data of the day charts. That's and ideally, like, I like my peace. I don't like to be trading in the market with anxiety and stress. And does it get stressful from time to time? Sure, we're all human, but the lower your time frames, that's also something you have to be willing to take on as part of your risk management, right? The lower in time frame you go, the more anxiety you're going to have, the more pressure you're going to put on yourself because things move so quickly, right? So with SPY, if I'm scalping this on a 5-minute chart, right, knowing where this goes, and I just want to look back of, where this is at previous day. We know that from yesterday back to, what's today? Today's Tuesday. So back to the, oh wait, hold on a second. Hold on, I got the days all wrong, sorry. Okay, so this is today actually, sorry. I just want to scrunch this data really quick. All right, so this is all the way back. Oh, it's 15, 16, 19. This is where I want to be, 19, sorry. I was getting mixed up by these numbers down here. All right, so the 19th, the highest that this reached on the 19th was basically right here, right? If you map that out at 383. So it doesn't even reach that point. So then I know on the 5-minute chart, yes, so the 377, I'm going to delete this. This was that level we put on the 4-hour chart. So I'm just going to delete this for a second. So we know on the day chart, that range of data that we had was 373 to 388. But now on the 5-minute chart, we know that the highest that this reached the day before was 383.87. So that tells me in order for this to be bullish and to have that momentum, it needs to break the 383.87. Now, if you enter before that, then now you're running the risk of just being lost at sea, right? Just this, a ship being tossed to and fro in the waves, because there's no real confirmation. It's just going to keep going sideways. And you see that on a 5-minute chart. You see that it just keeps going sideways. There's no real direction. It just kind of fluctuates in the same spot. It doesn't really do anything. But if I'm mapping this out in terms of my scalping my trades, from where this is now to where the levels I need it to be to scalp it is really, you would really want to start scalping it at like 382.14. So in between 382.14, I'm going to widen this just so you can see it a little bit better. So in between 382.14, when this breaks this level here, myself, Kia, Ray, we always give you guys the targets. This is our, 383, 388, whatever, the targets, right? So when this breaks this level at, when it breaks I got my levels mixed up, sorry. When it breaks this level at 382.14, you can basically scalp this from 382.14 to 383.87. That's your range. That's your maximum. That's your base target, right? And then from here, once you enter at 382.14 on the 5 minute, you can set your stop loss. You can set your stop loss at whatever you want to set it at based on your risk tolerance, right? If I'm doing it purely off of support and resistance, the most I would stay probably in that trade is if it breaks through this 381.59, you can see what happens, right? You can see what happens. It tanks here, right? So that would be my stop loss in that scenario, if I'm scalping this on a lower time frame, right? So just keep that in mind. The 381, I'm going to make this red actually, just to separate this data a little bit, right? So the 381, and I'll just write it just so it's at 381.59. And look, you guys should all be doing this on your charts. You should be putting these things on your charts if you're in certain trades, so that way you know when to get in, when to get out. It's okay to mark up your charts. You should feel like a kindergartner with your charts sometimes, of just marking it up. But if you get in at the 382.14 and you scalp that there, when that breaks that level, you can play it by then mapping out the intermediate levels in between based on what's the next highest point. So it's already reached the peak here. So now you've got to go back in time a little bit and look at it. What's the next highest points for that, right? And you see there's like 4 of them roughly, right? Ideally within, so you just put this on there. So ideally within the time frame, right? So this is over the course of, this was at 350. Last time it was there was at 1340. Last time it was here. So this is basically over the span of 4 hours right here, right? 10, 11, 12. Yeah. Basically about 4 hours from in between here to here, right? So in between 4 hours, you could essentially trade between the 382.14 and the 383.87, or between this range, the 382.65. Know that you're going to hit resistance at this point. So then you have to be able to make that shift and decide, am I going to stay in the trade? Am I going to walk it up to the next level? Am I going to sell some shares? Am I going to sell some option contracts? When you have these levels mapped out ahead of time on the smaller time frame, then you can get a better idea of what it's doing on the larger time frames. Harry says, is the 1 and 5 worth pairing, or would it be better to do a 5 and 15? You know, it honestly, it all depends on the stock, really, of how volatile it is. There is a case where it's just kind of case by case at times. Generally, I would probably stay within, I would probably aim towards either the 3 or the 3 to 5 or 4 to 6. I'd probably stay within like at least that 4 range. 5, I think, is kind of pushing it a little bit. You know, it's you're overcompensating. You're not overcompensating. You're undercompensating at 5, I think, and then at 4 is kind of a good sweet spot for me, anyways, from what I've found. But again, a lot of you trading the market on these time frames is watching the charts and actually looking at the trades and testing your theories of mapping it out. Okay, well, I think it's going to go here within this. What am I seeing on the 5-minute chart? What am I seeing on the 15-minute chart? The patterns. Does it hit these targets that I've listed? That's how you really get better, is by testing those theories and by watching the market. Like, you don't have to trade every day. Don't think like you trading every day is what's going to make you rich and what's going to make you build wealth. It's really not. What's really going to make you wealthy and what's really going to build your wealth is what you do when the lights aren't on, or, you know, when it's behind the scenes, that research, the learning, like that's the stuff that's going to make you rich and wealthy, and make you a sharpshooter at all of the charts, and just in understanding how the price action moves and how the support and the resistance is connected to each other. Venetia says, my issue is when I get confused when the market opens, I will have my stocks and entry and exit points plotted, but then I get flustered and doubt myself and end up losing or not trade at all. So understand this about when the market opens. When the market opens, whether that's on Monday, whether that's on Tuesday, Wednesday, Thursday, or Friday, right? Those first 15 minutes to the first half an hour, look, you can make your whole month's salary in that amount of time. You can make a 5-month, 6-month salary in that amount of time. But understand that the main reason it's so volatile in that time frame is because it's from the night before, right? People are closing their positions from the night before. People are catching on to news from the night before or from pre-market, right? If you've missed the trade, if you see something that's up, say 15, 20% in pre-market, chances are, if you try to enter that when the market opens, you're going to get smacked in the face because you've already missed it. You've already missed your entry point. Like if you're trying to enter contracts, if you were looking at that the night before and say the contracts were at $30 a contract, and then it's up 25% in pre-market, chances are those contracts are going to open at probably over $1 when the market opens, right? And if you're like, oh, well, last night they were at $30 a contract, so I'm going to set my price at, say, $50, and it's going to get filled. Well, it might get filled, but if it gets filled, it'll probably get filled on the downside when all of the money makers are selling off, right? So you're gonna get it filled when it's busting to the downside very quickly. That's why I don't ever get into trades right away when the market's opening, unless there's not a huge difference or there's some sort of a lag in the trade, like it doesn't take off right as soon as the bell rings, like there's a little bit of a delay. Then I might see how things move. You got to give yourself a good 5, 6, 10 minutes to see how the market responds and how the stocks fluctuate in relationship to all of the things that are happening. Then you make your decisions. Don't ever put in your pre-ordered buys of contracts or shares in pre-market. Like that's why you're probably getting crushed, because there's no way. Everything gets readjusted, right? Everything gets readjusted from the night before, from when the market opens, based on the new volatility of the new day. So it could be off by a lot. You might, this is why we always say if you're trading options, even when you're in shares, really, when you're up, say 30% in shares and you're not taking some of those profits on a day-to-day, you're just leaving yourself wide open to lose that money too, because the market could give you something entirely different tomorrow. And that's the case with a lot of penny stocks. Penny stocks move so quickly that, you know, they can be up 60% in 1 minute and they can be back down to 10% or negative 10% within a matter of minutes. And we all know that's especially true with options. In a matter of minutes, like we look at the trade that I got into a while back, which was Mullen Automotive, right? So this had a really great week last week. Now it got pushed back down to the abyss. And here's the thing on this didn't move very much. This moved up to like $30, or 30 cents essentially, like 28, 30, 35 really, sorry. I'm on the 5-minute chart. I gotta go to the day chart real quick. Yeah, so this went to 35. We were in at 22. And it went to 35. Now it's back down to the same area of where we bought it before. Now the thing with this trade was, my thinking behind this trade was the fact that the insiders were buying a massive amount of shares And then also they had just signed 2 really big deals within their space. And so my thinking behind this trade was them capturing the marketplace. On the lower time frames, this trade made sense. On the day chart, this made sense. It was consolidating all this time. And so, I mean, you look at it on the day chart, it's just been consolidating forever. So the thing is when these stocks run, the ones that have been consolidating for a long time, when they run, they're going to run really hard, which you saw that over a period of 3 or 4 days with this. And it didn't move much, right? It literally moved less than 10 cents or really 11 cents. But the amount of money people made on this, because at 35 cents a share, people can buy 15, 20,000 shares easy. It's not that much money. So that's why they move so quickly. But that's also why you have to be connected to the charts when you're in these trades, especially for the penny stocks too, on the lower timeframes, because they move so quickly. I don't necessarily watch the penny stocks on the day chart all the time when I'm trading them. I look at them on the smaller timeframes because that's where all the volatility is. That's where the a lot of the action is happening. But with the options trade, I believe it was the 50-cent call for January 20th, which is what I was in. It ran to 160, 180% instantly within a matter of minutes. I didn't get a chance to sell all of mine. But if you're in these trades and we say, we're in these far out expiration dates and the trades go up 160%, 200%, 300%, 50%, whatever, don't wait for us to tell you to take profits. You should be taking the profits on these trades in these increments. That's how the game is won, right? You're taking those profits and then you're repumping those profits into dividends, other assets, or you're taking a portion of that, rewarding yourself and hopping into your next trade with money from that you really can't afford to lose, or that you can afford to lose. Sorry. That was my thinking behind this trade. I'm still in those contracts. I still have them. They're still down. I missed that boat on that to be able to sell them, but it is what it is. It happens sometimes. I still made money on shares. I bought shares also. So I'm okay. I didn't risk that much on the options trades, but you got to be willing to take your profits at the targets. And for this trade, I specifically said what my targets were. I said my first target is 30. My second target is at 35. This is where I'm taking profits. So if I'm saying this is where I'm taking profits, it doesn't mean you have to. It's just a suggestion of where I'm going to, and that could be a bunch of different factors. And that's the same with Ray and with Kia and Chris and Crystal. Maybe I'm taking profits because I want more cash flow. Maybe I'm taking profits because I don't think it's going to go higher. But I do think it's going to go higher because in my original post, I'd said with their $168 million acquisition or whatever it was, is huge for the future, right? So all those things matter. So sometimes it's just a matter of if you're in it, you're in it. Just be patient. Just wait. You're in it. Watch the levels of when you're going to buy it next and move on to the next one. That's the game. That's the game. But that was my thinking behind this one. Somebody was asking me that earlier. They wanted me to cover it. Come back to these questions real quick. LD Vega says, what time should beginners start trading? Yeah, I agree with Ryan. I think if you're a beginner, you're not really used to the volatility of the market, you should wait until after 10:30, right? Truth of the matter is you can make all of your money that you need in trading in 2 hours a day. From 9:30 to 10:30 and from 3 o'clock to 4 o'clock, you can make all the money in the world in those 2 hours. In between is when you should be searching for trades. In between is when you should be searching for news. In between, you should be searching for, you should be going through your screeners, looking for new trends, new patterns, things that are coming out of the woodwork. that's where all your research is done, in those intermediate hours. But you really want to aim for the volatility of the market in those the early morning and the late afternoon hours. You can still make, you can make money too right around the lunchtime, when they come back at around like that 1:30 time frame, or right around like right before lunch happens at 11:30. Sometimes there's a lot of trades you can get into during that time also. But if you're a beginner, I would aim for after 10:30. The other, I'm going to look at some more tickers too. Somebody asked me what my thinking was behind SSRM. So I actually don't know a whole lot about SSRM in terms of the company, the research, all of that stuff. But I found SSRM through my screeners that I've given you guys in the Wealth Squad for the Marzu-Boza bullish candles, right? And so what that is like anytime it has that setup, it means that it's bullish for the next day. It's a continuation. So looking at this on the day chart, right away, before I mapped out any of these levels, right, this is where it was today. I'm just gonna expand this just to stretch this out a little bit so you can see a little bit more of the data clear. So just looking at this, I'm always looking at where's the gaps, where was it before, where's it at now, how far can it move. The first thing that I saw with this is that it's already busting. It's about to break past this level right here, which is then the resistance of all of this right here, right? All of this consolidation again it's just fuel for the rocket ship, right? Same thing for here. Like this here is a pretty decent gap, especially with within the options world. And mainly like this would be an options trade for me, not necessarily in shares. If I'm trading shares on this, it's at a stage 1 level, right? If you're familiar with the money flow, Uncle Gerald Peters, the money flow, this is in a stage 1, right? It's consolidating sideways. So this is a time that you would buy shares of this if you were to buy shares. Me specifically, I was looking at options. Going to the options trade on this, it didn't have much volume. I think the volume was like 72 or 75. The open interest was over 2,000, and the implied volatility was around 35. Now, anytime the volatility is like below 50%, it's a really good trade to get into sometimes, because if you can run the volatility, if you're in the trade and it's successful and you can run that trade up from 35% volatility to say 80% volatility, that's a pretty rewarding trade. And the delta on it was like $45, and then the theta was, I think, $3. So your risk to reward on this trade for options is super low, and it could potentially pay out a high reward, right? It's at 1567. This is basically saying in my targets, right, that I map this out on the low end of the spectrum, being cautious because the ATR is only 56 cents, right? So 1567 plus 56 cents, it's not that much higher. It's you're basically looking at less than $1, but it has the potential to fill that gap to 1692. That was my thinking on that for my targets. Now, if I were to do this on shares long term, this is at $15. You can basically get $7 per share on your money. If you wait, you probably end up waiting probably at least 6 months, because you take it backwards, right? It's December now. Last time it was at $22 was back in April. So you have to, you're roughly looking at 6-7 months for that to hit again. It could be sooner, but that would be the time frame if you're doing this on a long-term scale. But that was my thinking behind that on the day chart. But then if you go, like I said, if you're looking at your 4-to-6 ratio, now if you stretch this out, right, if you take, going back to the person who asked about 5 being a ratio that you could take, right? So if you take this to the ratio of 6 and you stretch this out to the week, right? Yeah, it's a little bit short of a week, but there's only 5 trading days in a week, right? So even if you take it out to 5, 6, you can look at the weekly chart. Now, if you look at the weekly chart, it's basically forming a cup and handle on the weekly chart, right? Here, right? You got the cup, and then this is going to end up popping out once this breaks free. So then that becomes a confirmation of a potential trade that you keep on your radar, because now, if you go back to my previous trainings on the different patterns, the cup and handle pattern is a bullish pattern after it breaks out, which it's right on the verge of that, right? On the week chart, the MACD is signaling downwards, but if you go to the day chart, it's about to cross over the histogram, right? So it's a slower moving trade. It doesn't move very quickly, so you just have to have patience with it. But if it runs, it's probably going to run pretty hard, pretty decent. So this could be a trade that you get into. All right, some other people wanted me to, I got about 10 minutes to wrap this up. Some people wanted me to look at Apple. So I just bought shares of Apple at like I think it was 137. And obviously things are still continuing in a downtrend, which is fine. But here's the thing, y'all. Don't get faked out by all of this downtrend stuff, right? I know it's a crazy time in the market, but I just want you guys to look at this and like just keep this into perspective, right? This is the 20-year chart on SPY, right? This little pullback is nothing in comparison to the growth of where the market is, where the market's going. Like, it's just not even making a dent in anything. Yes, it feels like it is short term, but long-term growth of where the market is going and where the market's going to rally at some point, like, it's going to continue to keep going up. It's just in that phase of, so now it consolidates, right? It didn't consolidate long for down here before it went further, right? And this is really some of the longest time that it has consolidated sideways, right? Because you look at here, this may be consolidated for like 6 months. This consolidated for basically another 6 months. So maybe that's what we're at here in 2022, 2023, is that this is going to consolidate sideways for 6 months. So be it. But if you go back, like I always say, be detectives, find clues. What are the patterns, right? If you take this little pocket right here, it's basically consolidating sideways from the middle of 2015 to the start of 2016, 6 months. It's basically consolidating from the middle of 2011 to the beginning of 2012, 6 months, right? It's basically consolidating from the beginning of 2010 to the middle of 2010, 6 months. It's all crystal clear if you look for the clues, right? So worst case scenario is that this started consolidating sideways the beginning of 2022, right? And we're still consolidating sideways 12 months later. So what? So be it. But if you notice on SPY of where this is at, it's still just holding the same levels over and over. Right? It only gets crazy because so many people day trade, right? But if you bring this up, it's still held the 340 level, right? Comes here. The next level below that's going to be like 318, whatever, right? The next level below that's probably going to be right here ish, somewhere. 280, right? So zoom out, look at the bigger picture of it all. If you go back to Apple, right? Let's go look at Apple on this. We're going to go look at Apple's bigger chart. Samantha, I'm gonna go into Tesla here in a minute. So everyone's panicking that Apple's getting crushed. But let's just go look at their 20-year chart. Sometimes it just helps to chart things out on a 10-year chart, 15-year chart, 20-year chart. If you look at Apple, like where it's at, this little pullback, this little consolidation is doing nothing to Apple at all. It's doing nothing. It's going sideways, right? But if you map out this data, shoot, I always forget to hit this button. If you map out this data, boom, it holds this level. It's holding this level. Below that, okay, like where it might get a little more scary is if it breaks this level here at 101, right? If it breaks that little spot there at 101, it breaks it at 101, then hey, it probably comes back down here even further to 80, 75, whatever it is, which I don't mind. I hope it does so we can buy more. But zoom out a little bit on the charts and you'll see that some of these things aren't as bad as what the rest of mainstream media makes it to be, right? A lot of people who are in the market, there's a lot of noise everywhere. You as a trader, you as an investor have to be able to silence all of that noise, right? Through your convictions of your thought process, of your analysis, and the things that you're doing, right? The charts don't lie. They can all be manipulated in a sense and stuff like that. But if you look at a history this long, it just gives you a greater appreciation for growth, for how fantastic the market is, the opportunities that are there if you just stick to the plan. The plan is so simple. It's all of the noise that gets in your way that makes it hard for you, right? And yes, it's, nobody wants to put in hundreds of thousands of dollars into the market to lose it, right? Nobody can control, Tesla, right? Let's go look at Tesla. Where's my screen? Well, say one of the things with Apple, right? So if it's in that downtrend of where it's at now, you basically go back in time here on the day chart of where this is at and where it kind of where that next bottom really is probably right here where this little pivot point is here around 125. Could it fall to 125? Sure. But that would kind of be the next stop of seeing where that's going to go, because it's right here at this peak. It could fall just a little bit further. I would say probably down to I would almost say probably 128-ish if that goes further to where it bottoms out. You just really have to map out the support and resistance levels and sit on it. Wait. Sometimes it just means to not do anything at all, right? I thought it was gonna, based on my analysis of where I bought it at, whatever it was 135.81. That was my cost, 135.81 or 87 or something like that. So when it reached this level, when I bought it, my thought process was it was going to do something similar here of what this was, where it was going to bounce and it was going to make its way back up. But obviously that didn't happen and it broke to the downside. But if you go back in time and you look at it, it basically gave you the blueprint right here right? Because it did exactly what that previous data did, right? From 17th of June, basically hit that 17th of June level, and then it bounced off of that at 130. So that understanding that previous data, how that affects the present, is really helpful too. That's my thoughts with Apple. Apple's one of the largest companies in the world, the most profitable companies in the world. I have shares. I'm sure a lot of you do too. You just hold on to them. We keep buying. We keep holding on to them. Now, for Tesla. So looking at the day chart on Tesla, right? This whole ATR being the 1079. So this could essentially end up going to like another $10 tomorrow to the downside, down to 1027, 20, 1020, 26-ish. Sorry, 120, 126. Or to the upside around 147 if you map it out in that way, right? But if you're playing this on the lower time frames, we'll say on I'm going to look at the 15-minute chart actually. So if looking at the 15-minute chart on Tesla, right? 148, 149. Like this here would be basically a resistance level that I would map out for myself, right? So from there, and then wherever this was back in time, whatever that level was to the downside, it's basically going to take this probably down here to 126, 127 would be my guess. Probably need to go back pretty far. I'm not going to go back that far just for the sake of time. But I would be cautious to obviously get into Tesla right now because it's been on this really steep decline. I think one of the members today was saying in the options chat of where Tesla will go next around that 126, 127 area, and that's all based on the ATR and its price action movement. If you're going to end up playing puts on Tesla, you know, I would say keeping your stop losses really tight. Like if you're in Tesla calls right now, like I feel like you have a death wish right now, because there's nothing with Tesla at the moment that says that this is going to go to the upside yet. I think maybe it falls to 126 before it starts to recover. I think eventually it is going to recover, but it's on a pretty steep decline, to be honest. But I would be interested to see what it does around the 126 level. From where it's at now, though, I would if you're into playing Tesla on the option side, then I would just be sticking to puts. Samantha, is there anything in particular you wanted me to cover on Tesla if you're still here? No? Nobody got the hands up. Okay, cool. Somebody asked me to look at AMD. So AMD being on the day chart, right? I'm looking at probably, if you're trading options on this, I'm not generally looking to enter until it's probably over this 66. 66.15 is where would be the level that I would contemplate getting into AMD. And then from there, I always talk about filling the gaps, right? You've got this huge gap right here. And when this sentiment shifts, you can map it here, but that takes it a little higher. But I would end up setting the targets probably at the 69.42 if you're playing this to the upside. Change this. Right, and then to the downside, if this ends up breaking 63, really, if it ends up breaking the 64, because this is where the previous data was the previous close of the previous day, yesterday. So you could essentially have an early entry at 64.62 to the downside, and then because AMD is, I say this because AMD, Tesla, super volatile stocks. So you almost have to play these stocks candle by candle by candle, rather than, some of them you can skip some of the candles and it'll end up bypassing those. But for these, I think they have really, really strict levels. So with that breaking 64.62, you could pretty much ride this down to the downside to 63.54, right? 63.54 to the downside on put options. And then from, this being where this hit for the low of the day, it was also this base, this peak here, also where this closed at, right? So this becomes this level. And then that next level below that ends up being right here at 63.08. Those would be my targets for AMD to the downside. 63.08, 63.03, whatever. It's pretty close. Those would end up being my targets to the downside. To the upside beyond the 64.62, it's obviously at the 65 already. So I'm looking for that next highest level of where that is. It's not very far. I mean, essentially, it really can fill this gap. I think the only resistance you really see above that, if it stays where it's at 65, the next resistance comes at 65.61 for AMD. That's my thought process of where I see that. Ryan asks, do you buy to swing them over time versus for the day? How do you determine that? What I'm asking is, do you hold until it hits targets, be it a day or days? Yeah, I mean, really, depending on the time frame that you're looking at, whether your strategy is looking at the day chart. Like I always look at the day chart because I want to see, like, what are the maximum possibilities? What could this do on the day time frame, right? But even though those are my targets for the daytime, maybe it doesn't hit those targets, and maybe it only hits the intermediate targets, say on the 4-hour chart or the 15-minute chart or the 30-minute chart. Like, how far, one thing that you could do is you could keep some sort of a spreadsheet, right? You could put the entry and exit levels all in columns on a piece of paper, right? From, the hour, what's your entry, what's your target? Then going to the 4-hour, what's your entry, what's your target? And you'll see, and then vice versa too, like going, stepping that down even further of going to, say, the 30-minute chart and the 15-minute chart, and also doing the same thing. What's your entry, what's your target on those? And then comparing all of those side by side, and you'll see that the difference in those targets are generally pretty tight. They're pretty much the same. They're not off much in terms of profit margins. It's just It's just slightly different in terms of, you know, where the levels are. Yeah, it's all just kind of conducive to your individual strategy. Um, that's it for tonight, guys. I mean, I love charting. I love going through this stuff with you guys. I hope that it's helpful for you. There's obviously so many stocks to get through. If I didn't get to any of your charts that you wanted me to look at, tag me in the Discord, and I'm happy to answer your questions there, provide analysis, charts, chart data, all that stuff. You can tag me in those rooms. But I hope it's helpful for you guys. Remember that, you know, 4 to 6, 3 to 5 ratio when you're looking at the time frames, and be really adamant about your levels and precise with it, and just stick to your plan. It's okay if it hits your level, it bounces to the down, you know, it retracts to the downside. You get out of the trade because you think you're going to get crushed, and then it breaks out and it goes further. It's okay. It happens to all of us. You're going to leave money on the table on trades. You're not going to be able to make all the money on every single one, but just know there's always going to be another trade the next day. There is. But really utilize this time that we're in the market where it's super choppy. There's a lot of uncertainty. There's a lot of panic. There's a lot of fear. Use this time in the market now to train yourself to be great. Like this is where great traders are made, is in this adversity and in this type of a market. Anybody can make money in a bull market. Anybody can. It's so easy. You can literally just hop into trades and make money. But where the market's at right now, the state of the economy, the inflation, everything else that's, you know, swirling around, this is really where champions are made. Like if you want to get great at being a trader, getting great at being an investor, this is where you go really hard at learning, testing your theories, charting, and getting into trades. Be confident in the work that you're doing, right? If you're just putting in all the work in Wealth Squad University, but you don't trust your convictions, then it's kind of in vain, right? If you feel like you're spending that time in Wealth Squad University, watching all of our videos, tapping into the trainings every week with us, and you still don't get it, go back to the drawing board at the very basic level. Go back to square one. Like it's okay. I do it all the time because you can always learn something new. And keep watching the videos, keep charting until it clicks for you. Until it clicks for you, you shouldn't be going on to the next phase. There's levels to it. Once, and here's the thing with understanding the charts, understanding support, understanding resistance, is that understanding the time frames and the language that's there, what it's telling you. Once you have this knowledge, nobody can take it away from you. This is a skill set that you will never lose. You're set for life once you know this stuff. That's like, don't take what we're teaching you in the Wealth Squad for granted, because this is a lifelong process. It's a lifetime skill that you're acquiring. So you shouldn't want to rush through it. You should want to take your time to learn it, right? You know, time in the market is everything. But the quicker you learn and the more time you commit to it, I promise you, the faster your money will grow. Don't think that you're losing time by spending all the time in Wealth Squad University or in here with me, you know, that this is time wasted. That it's not. It's not. You can change your whole life in 6 months' time from what we're teaching you. Less than that. I did it in less than that. Kia did it in less than that. Ray did it in less than that. Chris did it less than that. If we can do it, we know you can too. Bet on yourself. Bet on yourself here in the squad. Anyhow, I appreciate y'all. If you got questions, let me know. Tag me in the chats. All right. I'll see y'all.